Good morning. All right. Well, yesterday, what a day. Unusual kind of a pattern, but hey, I guess, hey, Happy New Year. So, as we reviewed yesterday morning, this bullish pattern, of this consolidation and bottoming tails, the gap up, and that holiday trading, markets opened up, slightly gapping up, kind of like what would be a gap and go since it's coming out of a consolidation, which turned out to be a big fake out kind of a move. So, new year, why did it sell off like that? Well, I don't really know. Um, Coronavirus getting worse. That was out before the open. Um, it was already known. So, why did it gap up? Um, New year, unwinding positions, not sure. Uh, Today, nervousness about what happens tonight with this election. So I guess we'll see. But just going with the charts, as if we unaware of any news, that's a nasty big day, right? Big gap reversal, which came down under a whole bunch of lows, but held major support. So now the question is, do we possibly be a red bar ignored? That's a pretty big red bar. But now we go into what we call our factory work. So take this, and it kind of lines up with what we call minor resistance there. And we can do such and such. And you can see that minor resistance area, which is a bit subjective as a reference point because it's going beyond what's directly to the left. In reality, from MTS, and what I came up with many years ago, trying to understand how the hell do prices go through that as if it's not there after being told, you can't go through. And I can't, but it's resistance. It's price resistance. One second. Somebody on YouTube typing. Okay. So rule is look, this big move down. You can see this fluid movement straight down created a price void. It says prices are going lower. It's a power move. It's also the weakest part of the chart, meaning there's nothing to the left except this subjective reference area. So rule from MTS is if it's traded above and below, it's been neutralized, but recognize it as being a subjective reference point. So that's part of our factory work. And so in this case, we say, well, if it stays in the lower half, lower third, it can't even get up there. And supply is creating a resistance area. And we see that on the futures as that begins to develop. So big wide range day typically follows narrow range day. We got news coming out tonight with this election thing, which I believe, and I suppose most do, it's going to move the market in one direction or the other tomorrow. And we just go sideways here today. Well, that builds up a launching pad to go up or down, which could drive it straight up through here, like if there's if nothing there, because there is nothing there. As far as a reference point to sell, that's real. Right? Meaning if we took this little area and put it over here sideways, if you can imagine what I'm talking, right? If we had this where it was like a breakout failure, where it came down and it went sideways and then dropped again, we'd have something directly to the left there to trade against. Whereas here we don't. All right. So historically, today is going to be a choppy day. We'll see what actually unfolds. And then tomorrow, that's whatever the news is. We'll see which way it drives it. But since prices are here and this crack, well, can go through here, and then they got another reference point, another reference point. Either way, if this is some type of news event that the markets truly don't like, these will just be short stopping points on the way down to some type of larger correction that has been coming, you could say, for quite some time, which in reality isn't, based on what I spoke about yesterday, to some extent, the underpinnings of a bull market, which is a yield curve. And none of them, even the shorter ones, right to this moment, are telling us, get the hell out of the market. We're get aggressively bearish. It's not the case just now, but normal corrections along the way are to be expected. And as we talked about now for a while, markets refused to do anything but chop sideways when our internals gave us, historical warning of a correction coming. And so normal correction, and it just chops sideways for the most part. And so what we look for now, if this is, this says this is going to continue, and for now, these lines to come down to a bullish area, and then we repeat the whole process again. So, we get to the futures, the warning shot, which we spoke about a couple of weeks ago, were the transports and the same concept of staying in the bottom part, and it did. And yesterday they participated in the bearish fun, stopped at the 50 MA, and we've got, this unfilled gap here, which isn't going to do very much. But anyway, you can see how it's now beginning to correct further, where it now built a shelf here that it broke down from again, and it's bearish. And now the weekly chart is going to form, and should form, a lower high and lower low into this support area, which historically sets up a buy setup. Right? This major support on the weekly is over here, and this lower high, lower low is a normal correction within a bullish trend. And then we will, when the time comes, we'll explain what happens here and how to deal with that in the smaller time frame. All right, let's just see what the futures are doing. Now they're down. I think they were up a little bit before. But as you can see, they're just kind of going sideways at the bottom of that trading range there and beginning to form a red bar in an uptrend. And bearishness about this weekly is this green bar after a bottoming tail bar. Now, I don't know where this is going to end at the end of the week, right? None of us do. But let's assume it looks like this. That's not good, right? You've got a bottoming tail bar and a green bar, and that said it was going higher. And so now we've got a beginnings of a bearish pattern. And the way we look at it here is from the point of view is, what does that mean about participants, rather than, hey, let's call this a bearish engulfing pattern, blah, 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 right? The typical candlestick jargon. Well, what it means is all of this bullish price action has failed. And that then tells us that traders are likely to start exiting long positions to protect their capital. Normal. These pictures, this is what MT Live is going to be about, in part. Tomorrow is about patterns and the beliefs that they create and what's likely to happen next. So this will be the start of some kind of corrective price action if it looks like this at the end of the week. Right? So same message, different chart. Qs here are down, right, but still above yesterday's low. So this has created, that's the idea of creating resistance area where there's nothing. Right? Pivot, right? And now when this bar gets done, it'll have 3 to the right, and the software will mark that as a pivot high, and that will have now created a resistance area. Well, where's support? Right there. And this is where we might be just stuck between today, give or take, maybe even a little poke below there, right? The markets love poking just slightly below there and then start coming back up again. So be aware of that. Be a little careful with that. A lot of people you would just suspect are going to be a little nervous as far as the news coming out and what effect that'll have tomorrow morning, which is normal. I am. All right, Jake, I'll take care of it when I'm done here. We'll see what the story is, but um, I am actually holding up maybe a little bit better, but still relatively the same. Russell, that started rolling over early, but it was the leader the whole way up. And this doesn't have any support other than yesterday's low. So, assuming this correction continues, this is likely to continue all the way down to here because there's nothing to stop it. And this is what we call the power of the void. And all of that hocus pocus in between here and there called Fibonacci lines and Ichikumi clouds and trend lines and all that other BS, you will find out that the majority of times, just like here, it is meaningless. And when you start to question that, as I did, right, many years ago, the light bulbs start to go on and you remove all of that crap from your chart and just simply look to the left. Well, bonds are down here a little bit, but still going nowhere. We've been talking about this forever. Oil, just chopping, waiting in the wings. Right. So far, just kind of building a new shelf here. We don't know which way it's going to go. Pretty whippy, down and up. A little W bottom down there. And gold, that took off yesterday, right up into resistance. So this has completed this as a breakdown failure. But now that it's at resistance, you know, likely it should stall, I would think. But again, this is repaired the damage, as I like to call it. Silver, just continuing to push up here. Right? It's outperforming. So gold and silver look like they're going to continue to go higher this year. And I think that is it. Um, yeah, already covered the transports. Just looking at, I guess, why did we trade? Why didn't we trade the breakdown? Well, I didn't trade the breakdown, McGraw, because to me, for me, it was an unusual pattern. Meaning, as I explained yesterday, this bullish pattern here, when it gapped and it crapped, it had to come all the way down past yesterday's low, right, to begin to get bearish. And so, the way it just waterfalled to the downside like that, it just happened so fast. And it just left me watching, to tell you the truth, which is, what else can I say? I need to get some kind of a retracement pattern, something, and it just didn't happen. It wasn't what I was expecting. Oh, in gold. Well, I wasn't focused on it intraday at all. When this started to happen, I wasn't even looking at gold. And from the futures point of view, or GLD, this here, I thought it would come up and go sideways. So it just, again, it's not a type of a pattern that's, in my book of trades type of setups, the breakdown and then this grind. I guess over here could have been, but I wasn't focused on it. So, I can't get everything, and I got two eyes, and my two eyes weren't looking over here. So that's the way it is sometimes, and just missed it. So there you go. All yours, Dan.
All right, good morning. Yeah, so we'll see if we're going to get some fireworks tonight. There was one analyst on CNBC that I actually agreed with. you know, there's more people saying, yeah, buy everything mode that we talked about yesterday. There was mention of it in the journal again today. But he said, look, if the Democrats get in, the economy starts to get opening, this, and this, interest rates are going to go up. And that's what Greg was saying yesterday. And, um, interest rates going up, that's not going to be bullish for the mentality of, oh, it doesn't matter what the PE is, um, just that justifies these high prices. They're going to have a wake up call. All right, let's continue here. Glancing at our opens, we put on a number of bear call spreads yesterday. LMT. Um, we're still in the SMH and call spread, the TAN call spread. But it looks like all our opens are fine here. Dash, we're still in. That's gapping down. Beyond, we have a call spread. Boeing, we have a call spread. That's up a little bit, but totally fine. Roku, call spread, gapping up a little bit, but no worries. Redfin, we're short stock. We're just in simple trail mode now. Oh, really, McGraw? All right. Well, that's good for us. I mean, I was holding my breath yesterday, and we have 4 more days. It's gapping down to 103 and a quarter. We're short the 110 calls. We just need that melting ice cube, 4 days. All right, let's go to gappers. MU got a double upgrade, and then Kramer was talking about it. At first, Kramer, I think he was saying stuff that I say all the time, like, where the heck were you, at $50? Why are you doing it now at all-time highs? But then he turned around and said, yep, Graham, this and that, Graham, Ram. And he's like, he thinks other folks are going to come join the bandwagon of upgrades. So we'll keep an eye on MU. It could be setting up here, maybe 30-minute high as a day trade, maybe. All right, let's see. We have, how about Amazon call spread? No. The reason why is it's actually, it looks more like a put spread over, whatever we decide, whatever. And the reason is we want to sell call spreads over resistance. Right. And this one is down 3 bars to major support. So your strike has to be 33.50, and that's way too far away. We actually sold a put spread on this WRB from support. That's when you want to sell call spreads. So Fubo, I've had on my list here. We've been watching it for a while, It, hit the 50 yesterday, broke major support. But look, now it's up. I posted this as a, well, let me give it to you all. I already sent it by Telegram. I posted that as a put spread candidate when I saw it hanging around here at 26 bucks. And then for some reason, it just decided to rip again. But that's on my long watch list. And on a short watch list, do you remember this thing that went vertical? And I saw it in my gap list yesterday. And if any of you remember, yesterday morning, I said, I'm going to keep this on my list as a short. Now today we're getting our bearish gap, 25.57. You know, it's gapping right to yesterday's low after going vertical. So that's on my short watch list, bottom right little window here. Couple is asking about IHRT, nice daily weekly. Yeah, Bitcoin. Yeah, I was reading in the, or I heard it on the TV, whatever, that JP Morgan helped cause the ruckus, I'm assuming, by saying, oh, long term, I think it can go to $126,000. Like, I don't know who they pay. I guess they got to pay these analysts here. You know, we pay you $250,000 a year just for I don't know what reason. So just, you know, just go write a stupid report, you know. Oh, okay, here's my report. I think I'll go to one, and but be sure to write the report where it's going to help our bank, right? Isn't that how Wall Street works? And then they can sell theirs into strength. You know, you know, all right, back to this IHRT. It looks fantastic. Thank you. Thank you so much. Um, looks great. IHRT, and you're right, daily, weekly. Daily, weekly are in beautiful alignment. All right, YouTube's asking about Walmart, PFR. PFR, no symbol. AUY. Yeah, that was a gap breakout yesterday. It's a bullish 15. So you can start, yeah, you could start with a day trade, maybe 5-10 minute high. The monthly is a buy setup, then an uptrend, 3 or more lower highs, and a reversal. So that's another good example of multiple time frame in alignment. Walmart, yeah, Greg mentioned this yesterday. It's in my list over here. It's making the turn, buy setup on the weekly. So yes, we will watch that. Yeah, CVS. Yep, I like CVS over the high. Abgo, somebody asked about that. You're still in it. Yeah, we unfortunately got stopped out. And somebody emailed me saying, you know, damn, what, you know, how often does this happen? What, this is crazy price action. We entered this thing and got stopped out in the same day. And so I sent him a copy, a screenshot of the spiders and SWM in this. This is not normal price action. You don't have a gap breakout to all-time highs, showing relative strength to the market all morning long. SMH, I can type. Look at this, was incredibly bullish yesterday morning as the market was selling off. I was staring at it in amazement. And as chartists, we said, well, then, you know, let's enter APCO. It's a beautiful breakout. And then I don't know what triggered this, but 1, 2, 3, 4 times 15 is 1 hour. 1 hour later, 1 hour later, look at that. That's not normal price action, folks. So when you say, hey, what went wrong with this trade? I mean, it wasn't the setup. It's crazy market is what did it. But you're saying you're in AVCO still. I don't know if you're in the put spread or in the long stock. You need a line in the sand. It's an ugly bar. All I can say is stop yesterday's low, unless I mean, I don't know what else to say about it. I saw this fiber. I saw this fiber just coming by my ticker, and I said, wow, I didn't know fiber was a $200 stock. But under last week's low, I like this as a call spread, doing the 220, 230. Thomas is asking about Tilray. Yeah, we're already in Tilray. We have long stocks and short puts, but also I gave it as a new trade to our weekly options trader. Hey, and just as a reminder, because I don't know, so many people don't know how to read or too lazy to read. We've sent multiple notices out that we have a new Telegram channel for the weekly. So I'm not posting to the old one anymore. But yeah, Tilray looks fantastic. Yep, yep, you can add, 5-minute high. Yeah, I believe it or not, I actually put an order in to sell that put spread pre-market even. Um, I did it at yesterday's closing price, knowing that I'll only get filled if it retraces. But folks, look at this. If we can sell the $9, the $9 puts right now, I'm going to do it. The jerk would not give me 1 penny price improvement. So he put me on the offer. That's me at 55. All right, so what I'm getting at is, come on, sure. Okay, finally. What I'm getting at is, yes, you can buy the stock. We're already in it, but this is an example where I don't mind selling at the money puts, because the reason is taking in 57 cents for 4 days gives me a cost basis of $8.43. So I'm okay with that. My stop is the same. So you just get a fantastic price improvement. All right, now Fubo here. Fubo looks great. That's 933. I gave it as a put spread, but this looks like a great day trade and swing trade if it closes strong. First target gap fill, which is 33 bucks, $4 away. Let's give this. I have it right here. Boom, boom. So maybe, so the small gap down in the market they're holding, IWM, the biggest 5-minute bar.